Bloomberg Audio Studios.
Podcasts, radio, news.
We'll take you back to Davos. Francine has just sat down at the Bloomberg house in Davos. She is sitting next to UniCredit's CEO, Andrea Orcel. Let's take a listen to their conversation.
You're, of course, the chief executive of UniCredit, and you're actually the busiest banker at the moment in Europe, trying to buy Italian bank, trying to buy Commerzbank. We'll get to that in a moment. But actually, there's quite a lot of hope and expectations in the U.S. that Donald Trump deregulates banks. How problematic is that for the European banking system?
Well, it is problematic. I think there needs to be the right balance between regulation and ability to execute or ability to operate. I think sometimes we lose sight of the fact that the business of bank is to manage risk well, but to manage risk. If we look at our clients and we say, well, we would like to help you, but we're taking risk zero and we are supporting you, they're going to look at us and say, well, hang on a second, what's your value added? So I think the management of risk is at the core of banks, and banks need to have the right controls, the right regulation, but need to be able to take that risk. So too much deregulation is not a good idea. Too much regulation is, or too little regulation is also not a good idea. You need to find the right balance. At the moment, the expectation is that the US will be well ahead of Europe in terms of being less regulated, and given that US banks do operate in Europe, that will put us at a competitive disadvantage.
I mean, do you expect regulation, and we've seen that in the UK last week, do you expect European regulation to just take a pause and wait to see what the US does?
Well, for the time being, there is a lot of discussion about where regulation is going to go. But for the time being, the indications are that Europe will maintain its course on regulation and will maintain the position where it is. And I think to a certain extent, if this is a steady state, this is something that we can live with, and that is correct. If it continues to tighten, then it becomes a difficulty.
How worried are you about competitiveness in Europe? What do your clients tell you?
Look, I think more generally, if you look at Europe, Europe needs growth. I think we need to rethink what is the vision for Europe, what is the strategy for Europe, and we need growth. Without growth, we're staying behind. We're already behind. It's going to get even worse. And in a way, if you look at growth or industrial growth as a car, the banks and capital market unions are the gasoline of that car. We cannot finance that growth, that transformation, that economic policy that we want without that feed. So if banks are not strong enough, not big enough, or overly stringently regulated, and we don't have a capital market union, we may have all the plans in this world, but we're not going to be able to finance them. At the same time, and you see it in a number of economies in Europe, banks from other economic blocs are coming in. And when we talk about competition in countries like Germany, we talk mostly about American banks and maybe one or two European banks that have an approach to Germany in a certain way. But the real competitors we fear are American banks.
I know you have skin in the game, but why is it so difficult to have a capital markets union?
I think that, like everything in Europe, I think we celebrate our differences, and I think this is important. And being Italian, I think when I go through Italy, I need to explain to people that what I get in Milan is different from what I get in Rome, from what I get in Palermo, and they all have different views, and they're very happy to tell you why they're better. So it happens in every country. It happens across Europe, and I think that's one of our strengths. But I think our biggest weakness is we're not capable to say, well, these 5 things we're going to put to common denominator because we can benefit more from doing it together than separately. And therefore, you have all this regulation, all these schemes, but there are always flexibility for each single state to implement them or not. And it always ends up being that on one or the other, a part of the European Union members implement and a part did not, and therefore we continue to have fragmentation and inability to build industries that go across Europe.
So someone who I know is watching on air asked me yesterday what Andrea Orcel is like, and I just said he's bold. You've surprised investors, you really shocked governments by buying a big stake in Commerzbank and offering to buy Banco BPM in Italy. I mean, what do you want to achieve and how fast do you want to achieve it?
Well, I think it's a little bit a connecting of opportunity with interest. If you look at UniCredit, actually I was being criticized for 3.5 years for not engaging in any M&A because I thought firmly that the bank required setting back on the right tone, unlocking, releasing trap potential. And we always said that at the right time, at the right terms, we would look at it. If you look at the key markets for us, where we can do an in-market merger, strengthen the group and move the dial very significantly, you get Italy, you get Germany, and not really in market, but for our CE, you get Poland. And it just happened that the opportunity to do something in those three markets came relatively at the same time. It also happened that we are exiting 3 years of transformation. We feel we are more ready than ever to do the next 3 years with even greater success. But at the same time, we have a team that has shown they're capable and that is capable of integrating and capable of accelerating what we can do alone with this acquisition. And if we do them, great. And if we don't, we will have tried at least.
Your moves have irritated governments in Germany and Italy. Did you predict the backlash?
No, especially in Germany. I think there has been a lot of debate on that, but honestly, I struggle to see what the debate is based on. I think beyond the fact that HVB and Commerzbank have been talking to each other in both directions for over 20 years, because it's one of those deals that you always want to do because it makes a ton of sense, but for some reason it's always derailed. In the last 2.5, we probably have had, and I probably have had, meetings with both leadership of the government and leadership of Commerzbank in the tens. We bought a 4.5% stake in anticipation that the government would sell their 16.5%, and we wanted to be at a level of consolidation. We were invited actually by the government as the only strategic to buy their stake, the first sell down at 4.5%. We did that in a transparent process. Actually, we were the best bid, and we were asked to bid again at a premium to what we had offered in order to get the entire stake. We agreed on a press release. During that process, we interacted again with the leadership of Commerzbank, warning them that we were going to participate. Commerzbank was the first call we had in the morning to debrief on where we were. And from there, it moved to surprise, well, imagine ours, and then it moved to hostility or to opaqueness. Well, from the first day when we bought, and the Minister of Finance was well aware, we said we would ask authorization to go to 29.9. We did, and we executed that. What we changed was because out of respect of both the government and Commerzbank, we said, well, given that the emotions are what they are, let's wait for elections. Yeah. Let's wait for things to calm down, and then let's have an opportunity to, instead of talk about perceptions, talk about facts, talk about figures, talk about the merit of the deal, the red lines, and one in front of the other, try to see if there is a base to move forward or not. At the end of the day, Francine, for us, I would say it's a statement for Germany. We're trying to invest in excess of 20 billion into Germany at this point, and I think that says it all.
So when people say you're untrustworthy or not transparent enough?
Well, there were other things that I was told in the past and now have been superseded by facts and over time. I really, on this time, while I could even say that my own government could have been surprised at our move, I cannot say that the German government and Commerzbank have a base for these allegations.
I mean, February 23rd is when there's the German elections. Do you expect something to change for you then?
Well, I don't know. What I think will change, or I hope will change, is an opportunity to invest, to instead of focusing on perception of what we might do, criticisms based on many times bias and our expectation of the past, that we can sit around the table and compare notes. I do think that the transaction, if we go back on that, it's excellent for Germany. Over the last 4 years, I chaired the supervisory board of HVB, and I got to to a great conviction that Germany has, first of all, that Europe does not exist without Germany, and secondly, that there was a great opportunity. So the two banks are very complementary. There is a lot of value to be created, and not only for shareholders, I think for clients, where we could compete in a better way versus both local and foreign competitors, and for the people of both banks. So in our book, sitting down and saying, what is it exactly that is wrong with this deal, and what is it exactly you do not like, and how can we eliminate that from the table and get to an agreement, that process that we haven't had an opportunity to go through, not with the government and not with Commerzbank, and it's not for not asking. I think I either met or wrote a letter to every party leader in Germany explaining where we are, and I do realize that in the middle of election is not the right time. And I also do realize that until this is settled, it is also difficult from Commerzbank to engage. But the biggest thing that I have, that I hope to get from election is an ability to interact.
What can you tell us about job losses? I mean, I know this is one of the worries in Germany, and we're expecting also an update from Commerzbank mid-February.
There is a lot of expectation and a lot of allegation on what would occur from a combination that has not been offered yet, because we haven't sat down. But if you look at UniCredit in the last 3 years, we did exit quite a few people. I don't think you have ever read in the press, not in Italy, not in Germany, not in any of our markets, that we did that in a way that the Workers' Council or the trade unions were against. That means we found a way that was shared to reach it. I think everybody focused on job losses, but we start before, at the origin. What is the vision for this bank? What is the strategy for this bank? What are we trying to achieve? Efficiencies in the industry are a matter that needs to occur. But at the same time, if I take UniCredit in the last 3 years, we probably reduced costs by 1.5 billion, but we reinvested in the business through upgrade of our physical network, digital, data, our factories, hiring new people, training new people, our university, 1 billion too. So it's not only about we made efficiencies, but we actually reinvested the large majority of those efficiency into the banks, which then brings us to, number one, having the people of UniCredit behind it, because they say, well, I understand what we're trying to do and where the money that we're saving is going. And secondly, it brings us to being in a really strong position now to address the next 3 years that are going to be quite challenging.
So we sometimes play this game in the newsroom of whose job would you not want to have right now, and I think it'd be your M&A advisor. I mean, are you ready to walk away from the deal?
Yes, of course. I mean, we implicitly walked away from deals in the past several times. So we walked away from Monte dei Paschi. There was a leak last time we tried to approach BPM, and we walked away second time. There was another leak that pretended, obviously it was not very advanced, that we were going to do something with Commerzbank. We walked away from that as well. So I do think that maybe for us, or for me in particular, there was the never-ending story, does M&A add value or does M&A not add value? And I think M&A adds value if it's done at the right terms, at the right time, in the right way. Otherwise, stay away from it. For us, we have an exciting proposition at UniCredit. I think for us, demonstrating what we can do in the next 3 years, demonstrating that not only we can continue to deliver at the level we were delivering, where people say European banks are over earnings, but actually add 1 billion on top to that and improve the profitability. For that is the exciting venture. If on top of that, given that we have confidence in what we can do, we can do acquisition at the right terms, integrate them, and further accelerate what the potential we have, not only for us, but also for the targets, great. And if not, I honestly think that if I take the next 3 to 5 years and I compare the prospects that UniCredit has, given the transformation and the investment with those of the average bank in Europe, we have no pressure in wanting to do anything because we will have great results.
Okay, let's talk about Banco BPM. A lot of investors say your offer is too low. Can you increase?
Well, let's put it this way. It's like starting with job losses as opposed to the outcome of things. I would say the following. Our offer on BPM is at a, depending how you calculate, 15 to 20% premium to where the bank was trading a month prior, what you would call in M&A undisturbed price. What happened in that month is that they announced a bid for Anima, where the market reacted positively on the transaction and assumed that it could be done at that price in full. Well, already yesterday there were rumors that they may not get the Danish compromise, and if they don't, that transaction may not occur, or may not occur in full. If that is the case, on the day it jumps 10% and over the period 15%. Should I pay a premium over that? The second thing is, straight after that, there were a lot of speculation of a merger with Monte dei Paschi di Siena. And again, the share price took another 5%. So again, that merger is not occurring for the moment, and should I pay a premium on that again? So if you look at undisturbed price, we're at 15-20%, is that we think it's a fair starting point, especially because when you look at their multiple versus ours and our resilience versus ours, we think we are significantly undervalued and they are probably fairly overvalued. We'll see. We'll see. In any case, it's premature. I think let's see how banks perform in Q1, in Q2. Let's see if Anima is done or not. Let's see a number of other topics. But at the moment, we stand firm on our offer and we think it's appropriate.
Okay, the $1 million, are you meeting with the Crédit Agricole CEO in Davos? Because I know a lot of you actually follow banks very closely, but Crédit Agricole controls 15% of Banco BPM, and there's also a distribution agreement, right, through its asset manager Amundi. So you really need them on board. I think,
look, there is a lot of speculation on Crédit Agricole. I would say the following. They're key partners of ours. We account for probably 70 or 80% of our investment go through Amundi in Italy. We have a contract with them. The contract ends in 27. We also do custody with them in Germany. We work with them between our factories and their investment bank are quite tight. We do a number of things together, so we didn't need to wait for BPM to talk to each other. There have been continuous dialogue in the last 3 years. I think we have a lot of point of contacts and a lot of common interest. If you ask me whether I am optimistic on finding a solution that is respectful of the par condicio for all the shareholders of BPM that works for both banks, I'm optimistic. But at this point in time, it's premature.
Are you optimistic about the Italian government getting behind the deal?
Well, I think, as you know, every time, and we've had this discussion over the years, every time you touch a bank, everybody has an opinion. And I do think that, it is fair enough that they want to determine the level of competition, what will happen next, because we would become quite a large institution in Italy. We would have 15% of the market. Actually, because of our overall size, people forget that in Italy we only have a 9% market share in loans and deposit. So we would go to 15. We would be a strong number 2 to Intesa. But I think it's fair enough that they want to make sure that competition remain, commitment to the Italian Mittelstand remains. Branches are kept open in the areas of Italy that are more remote and but these are all things that it's not a concession we're determined to do, and that's why we're buying the bank. So there again, we take the course of the so-called golden power as an opportunity to sit down, and it's quite structured, and to highlight all of the elements, and I'm actually quite optimistic that we will convince them.
But so golden power is basically a veto, which they're trying to play. If they put that, do you walk away? Is that a deal breaker?
Well, I think the golden power is, if they were to apply it, that is not just I can decide whether to play or not to play. But I do think, honestly, that if we put aside all the speculation of the press, the process is a lot more technical and constructive, and I would say, for now, I can only say fair, than people make it to be.
If your legacy is not buying these, banks, do you worry if you fail at buying this, or is there something else that you're
think one of the biggest, problems in M&A is that not buying equal failure, and I don't know, I don't see it like that. I think is buying at the right terms means success. Not buying at the wrong terms means less a success, but still success. Buying at the wrong terms means deep in success. So for me, if the walk away is because the terms are not there, or because we're not accepted, or because shareholders decide not to move, fine. As I said, I think we are already touring all the banks of the group. We've done 3 at the moment. And the view that we have on our opportunity this year is quite optimistic. As I said yesterday to our town hall in Germany, it's the first time that in January I see smiles when I go around, and you never know if it's because they just ended the holidays or because they're very optimistic about what we're doing. But going back on that, I think, to quote Warren Buffett, it is when the tide goes down that you see who's wearing trunks. And I think we have been talking about higher rates, low cost of risk, and inflation. And in the next 3 years, it goes exactly in the opposite way. Lower rates, high cost of risk, higher inflation. This is the tide going down. I think every bank is telling you, I have it all figured out. I don't think so. I think there will be a big divergence between banks that have it figured out, have transformed, have lines of defense, have levers to offset and grow, and banks who have instead spent the last 3 or 4 years squeezing the lemon and taking it the most we could do, and now they're going to start saying, well, hang on, how do I keep up? And I think this is, for us, an opportunity to show the degree of the transformation and show what is there. In a way, it's almost better if you don't do acquisition, because nobody can say, oh, well, yeah, they grew because they did acquisition. For us and for the team, if we can deliver that plan over the next 3-4 years, that's exciting.
But on the UniCredit performance, how do you mitigate lower interest rates?
Well, look, I think we look at it this way. First of all, I would say we're now united, we're strong. We have very high capital, we have very high provisions. This is a strong bank, but it's highly unified, highly empowered. I'm really excited about what we can do. The second thing is, I don't think any other bank kept overlays, which are fundamentally a provision to be used anti-cyclically when the cost of risk goes up, of 1.7 billion. So if cost of risk goes up in Europe, we're fine. If cost of risk doesn't go up in Europe, we will release 1.7 billion into our results. Secondly, we have been told, oh, you distributed a lot of equity out and a lot of distribution. We did. We distributed almost more than 25 billion over 3.5 years. And, but we also generated 6.5 billion of additional capital. So we have excess capital of 6.5 billion. No other bank has that much. And that's 2. 3, another buffer. These are what I would call lines of defense. Every year in the last 3.5 years, we have worked on transforming the bank. Yeah. And we've taxed our P&L by taking integration cost, about 1 billion a year. But now in the next 3 years, we don't need to take them. And so when you look at that, these are the lines of defense. But what I think people missed, because with rates up, everything floated, is not only the degree of our transformation, but if you look at UniCredit, we have an exceptional geographic mix with 40% in Italy, 35% if I take in Germany and Austria together, which have a certain anchoring, and 25% in CE. And in terms of client, everybody goes around, and you will now understand the strategy. We have about 65% of our clients are either SME, affluent, or private. And we're trying to develop that. So we worked very hard to leverage on these strengths, on being as effective and efficient as we can on these strengths. And last year, instead of spending the usual 6 months on budgeting, we spent 3, and then we spent the other 3 on how are we going to make it happen. Does everybody down the organization knows how to execute? And we're confident, yes.
Andrea, in terms of capital distribution, I mean, you said it won't be touched no matter what happens with acquisitions.
Well, I think
Can you give us a bit more of a glimpse?
I think it depends. But what does it depend? First of all, we've increased again the dividend payout to 50% on net income. Yeah. We started with 35, now we're at 50. That will not be touched. As they say in the industry, this is sacrosanct. Then we have the share buybacks, which are composed of ordinary redistribution and excess capital returns. The entire excess capital we have committed to go back to 13% and to distribute it back by 27. So you're looking at 25, 26, 27. 6.5 billion need to go back in the pockets of shareholders, in addition to the share buyback that is ordinary. That allows us to say with confidence that not only the dividend will be higher than what it was in the last few years, the dividend per share will be higher, much higher, but also the total distribution that this year we have guided to 8.5 billion will be much higher than this year in the next 3. Of course, if we do M&A, we have also said we will strive to keep the dividend per share unchanged to protect our shareholders. But part of that share buyback will, instead of going to buy our shares, to buy the shares of a target. Okay,
final question. And 2024 was a whirlwind, frankly, just following the news from UniCredit. Do you think by the end of this year you'll be much bigger through an acquisition?
I am optimistic that we will, actually.
More than 50-50?
More than 50-50.
We have to leave it here, but I have so many more questions. Commerzbank or the other one?
I don't know. We'll see.
Okay. A good sport. Andrea Orcel, thank you so much for joining us.
Thank you very much, Francine. Thank you.